Hello and welcome to Smart Money, brought to you by PPS Investments. I'm Alishia Seckam, and joining me today is Max Mojapelo. He's Investment Solutions Executive at PPS Investments. Max, thanks so much for joining us today. So, after some calm, investors seem to be bracing once more for volatility, and there are plenty of reasons for investors to feel uncertain at the moment, right? We've got geopolitical tensions across the globe, the upcoming US presidential elections, central banks trying to navigate soft landings. Locally, we've got a government of national unity and a new political era in play. And I've cited just a few of the reasons here. But what have you noted when it comes to client behavior during times like these, when there are just so many X factors in play?
Yeah. Alicia, firstly, thank you very much for having me. This is one of those years where it's quite special because most of the countries around the world have gone to the polls. And we've seen quite a right-wing voice coming out of the polls as well across EMs and also developed markets as well. And we await to see with anticipation what happens in the US. And I think the investor was really feeling that. And also they're coming from an era of high inflation, high interest rates. But I guess, we are coming down to a soft landing, as you've mentioned now. But, the investor has been really holding back and not wanting to expose any of their money to any risk at all. So they've been sitting in money. They've been sitting in flexible income strategies, money market portfolios. Some of them have been sitting in cash because cash has been yielding such good returns for them, given the high interest rates. So, it's times like these where you start, asking yourself the question, when is the investor really going to start coming back into, your local equities, your global equities, and what have you? Because, you can't sit in cash for a very long time as well, because that can be detrimental in the long term.
Yeah. In response, what are you saying to clients and advisors alike, Max, as they look to then rebuild, resilient and sustainable portfolios amidst it all?
Yeah, it's always the case that we have to always take it back to the three tenets of risk. You've got your risk capacity, you've got your the psychographics around risk, the risk need as well. So as much as at this point in time, most investors might say, listen, I don't actually have any money that I can lose because you've got the high inflation, you've got the high interest rates, I'm paying so much and what have you, so I can't lose any money at all. So that's your risk capacity. It's very, very low. At the same time, because I'm very uncertain psychologically, I don't want to be taking any more risk. You see, but then at the same time, you still have the risk need. Long term, I do need to get that CPI plus 4, CPI plus 5, and so on and so forth. And you're not going to get it in cash for a very long time. Right now, you might be getting it because of the times that we're in, but you won't get it long term. So what we're telling advisors, what we're telling our members is that remember there's three tenets to risk, and you have to think about it from that point of view as you're constructing portfolios, as you're choosing the investment solutions that should be aligned to your long-term objectives.
So then, Max, with that kind of thinking in play, how does PPS Investments build solutions to, ensure a smoother investment journey for clients?
Yeah. So I think, what we try to do is to really maximize all the free lunch that you can get. And, the one free lunch in investments is diversification. And, you'd find most houses will do your asset allocation. And we know that the bulk of the variability of returns comes from your strategic asset allocation. And then you can add a little bit more from your tactical asset allocation. But, we are a multi-manager. So we also go further down to look at the various styles, the various investment styles across managers to then start bringing together a really diversified portfolio whereby, for you to get to that CPI plus 4 or plus 5 or plus 6 doesn't imply that you have to be stomaching a very bumpy ride. But we mix managers together that we know, depending on the type of economic conditions that we're finding, the types of whether we are re-rating in the market, whether we are de-rating in the market, whether it's a momentum environment or whatever the case might be. We've got a set of investment managers that don't necessarily look at the world the same way. So we try to mix as a good set of managers that are uncorrelated in how they look at the world. that are uncorrelated in what they think is wrong with the market. Because that's what asset managers are trying to do, you see. They're trying to extract some form of alpha because they intuitively think there's something wrong with the market, whether the market is fearful or greedy, or the market is driven by macroeconomic conditions, or whether there's premiums in small caps, or whatever the case might be. We take that and we combine it to then give you a smoother ride to get to that investment objective.
So, Max, you talk about this manager mix, right? And in part, you've alluded to the answer to my next question, but I'm going to pose it more directly. What are some of the benefits discretionary fund management offers clients? And bearing in mind that this sees, investment decisions made by a portfolio manager for the client at the portfolio manager's discretion. I mean, who in particular is this kind of service targeted at?
No, 100%. I mean, so what typically used to happen was that you'd find investment managers, they go out, they do some form of research. So their product development team will try to understand what's happening within the markets, what are some of the liability pools and the liability structures, and then you create a product, and then you take that product out into the market. But what we tend to see is better is for you to actually be closer to that liability side. So what do I mean by that? So your wealth manager is more concerned about understanding the liability side, understanding you, Alishia, as a client. And so by getting the investment manager closer and closer to the financial advisor, we are better able to actually create solutions, right? To create solutions that are aligned to the cohort of clients that the advisor actually has. So you might say, well, there are conservative solutions or conservative funds out there. But the advisor might say, listen, for the cohort of clients that I've got, they haven't saved enough. So my conservative is slightly more aggressive. Do you get it? So then that means that we need to actually put in the maximum allowed 20% equities, or we need to max out some of the allowed global counters that we can have in the portfolio. So it's so conservative, but then it's more on the riskier side. Why? Because the cohort of clients or members that I'm dealing with as an advisor requires a type of solution. So it's a lot more tailored, it's a lot more customized for a set of clients at a much more smaller scale.
And I see you, Max, being very emphatic about the fact that it's a cohort of clients, right? Because these are investments not customized or tailored to a client specifically. Instead, investments are made according to a group of clients, strategies, goals, risk tolerance, etc. What interesting client trends are you seeing in the DFM space in terms of variables like the type of clients that are opting for DFM?
Yeah, so I mean, typically when we come in is when you'll find that the advisor has already amassed a few set of clients with large assets, and typically that would be clients that are about to go into retirement. So that tail end where members are going into retirement, that's really where we find most advisors do require help, and we are creating solutions as well that are tailored for that liability pool, that are tailored for that post-retirement liability pool, where some of the members will say, listen, I don't necessarily want to go into a guaranteed income providing solution. I actually want to go into a living annuity solution where there might be some bequeathing objectives that are also linked to it, but then they have to take on certain risks such as the sequence of return risk, longevity risk, and it's sitting on their own side, on their balance sheet, and not on the insurance balance sheet. And so we have to look at that liability pool and actually create solutions that can match for that, that are high in ketosis, that are positively skewed, have some hedge funds, have some alternatives, and so on and so forth. So we're bringing together sets of solutions that we know for that advisor that we typically deal with. We can give them the solution.
So let's home in on those solutions then. Talk us through some of the multi-manager investment funds PPS is putting on the table right now and what differentiates them.
100%. So, I mean, I would say just starting from the top, I can talk about returns, I can talk about the managers, I can talk about a whole lot of things, but I love to start by talking about, what we stand for, like, what is our purpose. Why do we do what we do? So at the very start, we are very not simplistic, but long term in our approach. We try to play the infinite game, and you'll see even in how we construct portfolios as well. We don't chop and change. We like to stick to our guns. So the way that we take, for instance, our balanced fund of fund, 50% it's in our multi-asset managers, some of the top managers in the country, some of the boutique managers in the country, and then 50% is actually done from a specialist point of view, where we do the asset allocation. And sometimes the views might be different across us and the asset managers that we have appointed, but we find that that is fine. That's added diversification for members. And then over and above that, in each and every one of these solutions, remember, members can generate profit share. I don't work for a shareholder. I work for my clients. Like, generally, they pay my salary. So everything that we do is for you. But not only that, I take all the profits and I bring it back to you as my client. So that's just one of the key differentiators in terms of our solutions. Over and above the fact that, if you were to look at the fact sheets, I can tell you now, our performance, it really stacks up.
Okay, so infinite game in play then. What are some of PPS Investments' future plans in the DFM and multi-manager sectors?
Yeah, so I mean, we're very passionate about education, given the fact that we are focused on the professionals within the country, within the Australian market and the New Zealand market as well, from a group strategic point of view. But what's exciting is that we made commitments to the Age Fund and the Ideas Fund. We've made investments there, and they're building schools. They're doing fantastic things in and around education. So within the DFM, I cannot wait to bring some of that into the DFM as part of our post-retirement income solutions. And because, again, it speaks to what we do, it speaks to what we stand for. And for us, education is the route for everybody to be successful, whether you are an African child, whether you are somewhere in Mexico, whether you're somewhere in Brazil, whether you're somewhere in India. Education is that route, and we really, really believe in that.
Absolutely. Well, let's leave it there, Max. Thanks so much for having joined us in conversation today. Max Mojapelo is Investment Solutions Executive at PPS Investments.